for insurance also calls for a cut in the 100 crore rupee capital requirement to encourage smaller players and makes a pitch for composite licensing.
Hello and welcome to a fresh new edition of Markets Forward, the show where we get you everything which happened today, but more importantly, try and prepare you for what is coming next, which is tomorrow, all the data points, all the news and all the views. I'm Prashant, with me, my colleague Rima Tendulkar. Rima, hi.
Hi, and we've got you covered for the next 20 minutes with all the big news, the key developments on the Lal Street, top corporate voices and the events to track ahead. But first, the markets. Pretty good day, right? At the index level, we're above 21,900, and this is despite banks not performing.
I mean, you know, we are getting into a place where it's kind of hard to say because we're already at all-time highs, right?
Yeah.
So either the market takes off from here or there is a bit of a pullback because, I mean, it's very unlikely at these levels it'll stay with the 50, 60, 100 point kind of a range. And that clarity is not really coming. Last 3 days, the market sold off on an average 200 points from the day's high. Today, it was a lot better. The index ended 150 plus points, although in the first 1 hour, there was a fair bit of volatility. It looked like a repeat of the last 3 days, but it was not to be. So, you know, as I said, we are at highs. So you can look at yesterday's high and then, of course, the all-time high within a few percentage points, all of them. But the bigger thing is that the Nifty Bank, I mean, there's a fair bit of divergence and it's severe. The largest weighted sort of group of stocks, which is banks, is just not participating. It's just not firing. And there, it looks like, in all likelihood, we perhaps retest the recent lows, which is 44,429. And if that happens, you know, can the Nifty continue to go ahead? It's had help from a rotating sort of, you know, cohort of stocks. Reliance goes up someday, someday something else does well, but banks consistently have underperformed. Today, for example, it was IT services, right? Out of the blue, 3% higher. Is it just a trading bounce, or are people taking a more kind of concrete view and kind of sticking with it because we've had these bounces once in a while? I just want to mention one data point, and this is this, the public sector space. You know, a very simple measure to see if things are getting a little overheated is to look at something called the RSI, Relative Strength Index. Now, anything above 70-ish is overbought. The CPSE index on weekly charts, RSI now is running at about 95. You know, that is very, very high and that's very, very overheated. So be careful in that sense. And of course, I mean, I think at the margin, global action also is becoming more relevant than it has been lately. And that is largely because against most expectations, yields are rising sharply and dollar is also strengthening, which I think was not the base case for the majority of market participants. Rima.
Well, the mid-caps did well today. The mid-cap index ends with a gain of 1.2% versus a 0.7% gain for the frontline indices. IT was the star sector, the IT index gaining about 2.9%. In fact, it was a pretty broad-based rally because IT did well, metals did well, the auto index had a gain of 1.5%. It's only banks which struggled in trade. Amongst the top, the IT gainers has HCL Tech, TCS, Wipro and Infosys. Another loser to point out today is Britannia, and that was under pressure ahead of its numbers. But let's get you and tell you what's lined up for you on our show today. We start with the top movers of the day with Vivek. The stock of the day or the sector of the day is IT, TCS and Paytm, and I'll take you through some of the key reasons why. And CNBC's popular segment, D Street Chatter, is also on the show where Nimesh will tell us what's about the expected block deals. And last but not the least, we delve into the key market events to watch out for in tomorrow's trading session. But to the first segment of our show, Vivek is joining in. He's at the big wall with the top stock movers of the day. Vivek.
Well, that's right. You know, a lot of interesting names doing quite well in the session today. I know after a long time, you actually saw the insurance sector doing very, very well. You know, we did report that there could be a reduction as far as GST rates were concerned for health insurance. The back of that, have a look at some of the stock moves over here. HDFC Life over 5%, Max Financial, ICICI Proof, Lombard, you know, in the last half hour did very well, and even New India Assurance doing quite well for itself. The next set of stocks that we need to keep an eye out for, of course, was the IT index. We mentioned the whole host of reasons, but have a look at some of the stock moves. You took us through the highlights of how the large caps have performed, even some of the smaller cap names. Look at OFSS, look at Emphasis, even they participated in today's IT up move. The next set of stocks also Metal Pack. Metal Pack, after a while, today, you did see broad-based buying. Look at SAIL, up over 8% in the session today. Along with that, Vedanta, Tata Steel, Nalco, Welspun Corp, all of these stocks doing very well in the session. The next stock to keep on the radar was Bharti Airtel. Good set of results. ARPU continues to outperform its peers, up to almost 208. And in the conference call, the management mentioned that it's not a question of if there will be tariff hikes, rather a question of when. So that particular stock holding on to its gaze. Last stock, top gainer as far as NSE 500 was concerned, was Triveni Turbine. Good set of numbers, very strong ordering activity, as well as order book momentum is quite strong. So that particular stock ended higher at the upper circuit. On the other hand, some of the stocks that were losing, NSE 500 top loser was Sprint Pipes. It was a weak set of results, volumes going down 2% on a year-on-year basis, underperforming its peers. So that particular stock dragged quite a bit. Policy Bazaar, while the insurance pack did well, this particular stock on the back of a lot of news flow regarding IT raids, and despite a clarification, ended quite lower in the session today. BSE, saw a bit of profit booking after the Q3 results. And lastly, Butterfly, Gandhimati, all-round miss versus what the consensus was anticipating. That stock too ended quite in the red today.
All right, Vivek, a comprehensive wrap-up. Thank you very much for joining us with that. Jay Bala is with us, and so is Siddharth Khemka, both on charts and fundamentals. Gentlemen, great to have both of you here. Thank you very much for your time. Jay, we're pretty much at all-time highs. Now, at such levels, something's got to give, right? Either we break out and continue going higher, or there is a bit of a pullback. On balance, where do you stand? I mean, you've been a little cautious for a while, but there is always something or the other which comes to the rescue. It's Reliance, it is IT services today, or something else. What's your sense?
Yeah, here's the logic behind it, Prashant. Unless people sell, they don't realize the gain. So now I would lean more towards the possibility of markets pulling back rather than markets pushing further higher in a significant fashion. And the banking index has been spot on, behaving like I've been pointing out for several weeks, probably even a couple of months now, and that's been putting a brake on the market. We just need one more sector to give hand to the banking sector, and most of the leading names are looking stretched and tired. So probably the markets start to pull back will be pretty significant. But even if the banking index were to go below the 44,429 low that you just mentioned, that will probably be due to something in the cross-sector headwinds. So we'll see what happens. I'm leaning more towards the markets cooling off from here rather than pushing significantly higher.
Okay, markets to cool off from here. IT had a fantastic session. The Nifty IT index gaining close to about 3%. Now, HSBC has come out with a note where they've upgraded TCS to a buy, but they've downgraded Infosys to a hold. And here is the key reason. They're saying the gap between Infi TCS valuation has narrowed and is only at 10%. Now, if you compare the two, they're saying the outlook for TCS is superior compared to Infosys. And therefore, the valuation discount that Infi is trading at versus TCS probably doesn't make sense. They're also saying TCS is the least volatile business and stock in the sector. And for Infosys, they believe it's tough for the company to surprise positively on margins because their margin performance in FY24 has been driven by the company cutting down their headcount and increasing their utilization. But once demand picks up, they expect the company to start hiring again, increase their bench strength, which could hurt the margins. Also on Midcap IT. Midcap IT, remember, has gone through an extraordinary outperformance over the past 2 to 3 years. But this quarter, HSBC is seeing some cracks on the profitability front, and they believe the pressure on Midcap may remain in the short term until demand meaningfully picks up, which according to the HSBC view is unlikely for now. So the call is that we're still sailing in cautious waters for them. But between Infi and TCS, their preference is for TCS, which is why they've upgraded it to a buy. Siddharth, between Infi and TCS, what would your preference be?
Yeah, Sonia. So I think we would also like to go with the TCS, but unlike HSBC, we believe that both TCS and Infi are standing at the same point. Both have a very diversified, robust order book, which gives visibility for the future. Near-term outlook is definitely a little bit hazy for both of them. Infi has lowered its guidance, which kind of impacted. But we believe that as you progress into the next financial year, FY25, things would look much better. And to support the near-term argument, we have seen the earnings that have come in Q3 has been better than expectations, at least if you look at from a IT standpoint. And that is something that is supportive to the large cap IT. And they also tend to benefit if at all there is any slowdown in the US, which so far has been elusive, and that is kind of giving the growth to the mid cap IT names, which the large cap IT at the current valuation seems to be much better placed given the diversified order book, large client presence. So we would prefer both TCS as well as Infi, but between the two, TCS would be our preferred pick.
All right. TCS preferred pick there. Well, Paytm was the other one, which soared 4%. And of course, from the day's low, there was a massive 15% plus kind of a move. Sources told CNBC-TV18 that Paytm founder and CEO Vijay Shekhar Sharma met RBI officials yesterday. Ritu's here with the latest on this one. Ritu.
That's right, Prashant. Paytm's founder Vijay Shekhar Sharma did have a meeting with RBI officials over the payment bank matter, but there's not much to write about just yet. We understand there's been no forward movement or any relief provided by the regulator, and the restrictions are likely to remain for now. But while the bank's trouble may not really have ended, the free fall in Paytm shares, that seems to have found a bottom. We saw the 197 stock rise in trade, closing about 3% higher after 3 days of relentless selling. Meanwhile, we understand that a bunch of startup founders have penned a letter to the Prime Minister's office, Finance Ministry and the RBI, urging them to reconsider the sanctions on the bank. These founders, about 12 of them, including the founders of Capital Mind, Innovate, Make My Trip, Bharat Matrimony and others, have said in their letter that such actions on the bank could have far-reaching consequences for the ecosystem, and they could impact millions of Paytm users. They could impact India's image as a business-friendly nation. Now, these founders, we understand, have also urged RBI to consider engaging in a dialogue with the bank and give them an opportunity to rectify the deficiencies. It's unusual to see this kind of a reaction from the community, but we understand there are also others in the startup ecosystem that did not associate themselves with the letter. In other developments, finally, there have been some reports of a potential sale of Paytm's wallet to Jio Financial, but both Jio Financial as well as Paytm and Paytm Payment Bank have clarified to exchanges that they are not engaged in any such discussions, calling these news reports speculative and false.
Thank you, Ritu, for that. Another stock of the day is Petronet LNG, which soared nearly 7% on news that the company has signed a multi-billion-dollar deal to extend LNG imports from Qatar. Sonal joins in with the importance of this news. Sonal.
Well, thank you so much for that. We know some confirmations that have come about. It is based on a PTI story earlier today, which indicated that they'll be signing 2 deals here. One of the deal has been confirmed where Petronet LNG will go ahead and they will extend imports of 7.5 million tons per annum of LNG from Qatar. And this is a part of one of the contracts which was getting over by 2028. So it will extend for another 20 years to 2048. Now, we don't know the contours of the deal, but the PTI story suggested that the pricing here will be significantly lower than the current price. Petronet LNG does say that they will see it pricing at 12.67% of prevailing Brent crude prices, and that is something that PTI story suggested as well. The other part is the second volume picture, which is the second contract where Petronet LNG imported around 1 million tons a year. They entered into it in 2015, but there is no confirmation on that one, but there is an indication that that one would be extended as well. Now, how is it important? It is because the pricing is expected to be quite low here. It means additional supplies for LNG coming into the country. That would mean security at a lower level, and that would mean margin accretion for Petronet LNG. So this is the reason why Petronet LNG soared, because it is coming in at a lower price. We would need more details on the second contract, but this is a positive news that has come by, and that's why the stock was higher in trade.
Okay, Sonal, thank you very much for that. So that's Petronet LNG, which ended sharply higher. Jay, I know you have a trade in the PSU space, but it's not Petronet though. So why don't you run us through what you like and a view on Petronet as well?
Yeah, Petronet, steel stocks, and some of the very selective insurance names haven't finished their move. So, we can look at these names on pullbacks, and that'll be a good entry opportunity for a trader. On the PSU space, Bharat Electronics, against a risk level of 170, makes sense, and it looked like it's got an unfinished up move towards 210. And if the stock were to close above 187, that will confirm that the short-term pullback for BEL is done, and it's starting to next up leg or uptrend towards 210.
And Sid, for you, to your clients, what are you telling them in terms of trades or etc.? What looks good in that space, PSUs?
Yeah. So Prashant, we are definitely positive on the PSU space. If you look at especially the oil companies, we were talking about Petronet, where we have a neutral rating. The results were marginally weaker than expectations, while the utilizations definitely picked up. GAIL is a stock within that you can say oil transmission space that we like a lot. It reported very strong numbers, EBITDA growth of 15 times. And that was led by the transmission and as well as LPG segment. Along with the big impact came in from the turnaround in the Petchem segment, which is a case we are seeing across a lot of these especially chemicals as well as the Petchem companies, that things are now turning around and improving. So overall, we are expecting a robust domestic gas demand that would help the gas transmission volumes for GAIL to reach around 124 MMSCMD by the end of this current year. And then we are looking at an annual growth of 10 to 12%. Valuations are comfortable. They are having a healthy free cash flow generation over the next 2 years. ROEs are improving to 15%. So definitely, we feel that this could be one stock from the oil PSU space which could do well.
All right. Got that. By the way, when you talk about Petronet, the big expectation is that this year, maybe actually only later this year and next year, there'll be a huge supply glut as far as LNG is concerned, which actually is great news for a big importer like us. And then, in the bargain, I guess, for Petronet LNG as well. But more on that later. The Parliamentary Committee on Insurance has called for a reduction in the 18% GST that is being levied in the sector on insurance products. That's not all. The panel has also asked for new and affordable products. Parikshit is here with details on this report. Parikshit.
Well, one of the items that the Parliamentary Committee on Finance has recommended is lowering the GST. They have said that 18% GST on insurance products needs to be rationalized, especially in the case of microinsurance or the health sector, especially for senior citizens. Then they've spoken about the need for a composite license, also reducing the entry barrier for new insurance companies. Currently, there is a minimum cap of 100 crores that an insurance company must have before entering the sector in India, and this they feel can be reduced to allow smaller, newer entrants, niche players to enter so that a larger geographical coverage could be ensured. They've also said that the IRDAI should consider having an ombudsman on the lines of the RBI to make sure that all public grievances around compliance, about payout of insurance is actually taken care of. They also speak about strengthening the public sector insurance companies, the 4 public sector insurance companies, and one of the ways that they have recommended for doing so is disinvestment. Back to you.
Thank you very much for that. Jay, you are cautious on banks, but what about insurance in particular? Names like HDFC Life rally close to about 5%. Anything in the insurance space which catches your eye?
See, the rally in the insurance space has come at the cost of LIC. LIC has, taken away market share, and that seems to be reflecting in the prices. And most of the names like HDFC Life, Max Insurance, they all are in a firm downtrend. The only exception there is, I won't say only exception, there are a couple of exceptions there. The New India Insurance Company, that could have actually exhausted its move today, so caution there. One that's positive is ICICI Lombard. That is bucking the rest of the pack within the private life insurance space. It's still got higher highs to come through. So you might want to look at ICICI Lombard on a pullback. But, other than LIC, rest of the space is in a counter-trend rally rather than start of a new upgrade.
Okay, all right. That's the view on some of these insurance stocks and LIC in particular. Well, let's just take a quick look at some of the top corporate voices that we got through the course of the day. And I'll start with Gokuldas Exports. We spoke with them on the back of the numbers which they reported for the third quarter. But they also recently did another acquisition. The second in about 6 months or so. The company, the Gokuldas management expects overall revenues to double by FY26 over the base of FY24. That's not all. They also see margins to be about 100 basis points higher than where they are right now. Now, speaking about the company's latest acquisition, that is the acquisition of a company called Matrix, the management said that 10 to 15% scale up after the acquisition was possible in this business. The company, by the way, Gokul Das, is also looking to raise fresh funds via a QIP.
Idea Fort surges about 10% after it delivered in the third quarter. The firm's CEO, Ankit Mehta, said the revenue saw a spike in Q3 as events to watch out for. Welcome back. You're watching Markets Forward. It's time now for a segment D Street Chatter. Nimesh is joining in to get us an insight into the dealing room chatter. Nimesh.
Well, while IT saved the day for the bulls, some bit of profit booking was clearly visible in select PSU baskets. So that's the overall mood in the market. In terms of individual names, though, the first is I'm focusing on a few large deals which are expected very soon, which includes the names like Vedanta, a large block deal expected very soon. Same is the case with Mankind Pharma as well. The promoter entity is likely to sell a large stake. And so is the case with L&T Holding Finance. So these are the three names where expect large block deals very soon. The second is SJV, and I spoke about some bit of profit booking in select PSU names. SJV stands out. While the stock has been consolidating, there is clearly some bit of selling coming in from larger institutions. So I understand a large domestic mutual fund has been actively selling in SJV and off late. The third name is Infosys. While the entire IT basket did well today, Infosys stood out largely on back of very strong buy flow. So some bit of interest is back from larger institutions in Infosys as well in today's trade. And the last is BF Utilities. For the last few days, some bit of traction is back in BF Utilities as well. Big volumes as well in today's trade. And I understand an influential HNI investor is an active buyer and hence a big move in the last few days in BF Utilities as well.
Okay, so from 600 to 700 plus in what, 4 or 5 days now, BF Utilities. And Nimesh, thank you very much for that. We'll keep an eye. Well, events to watch when we come back tomorrow. Mangalam is standing by with that list. Now, Mangalam.
Well, a couple of stocks that will be reacting to earnings that came post-markets today. We will have, of course, Britannia from the consumer space, Nykaa as well, reacting to the numbers that came in post-markets today. But a couple of important consumer numbers coming into tomorrow as well. So we have the likes of Tata Consumer, Nestle and Trent. And mind you, these are all companies that are likely to outperform the industry. For both Nestle and Tata Consumer, you're expecting double-digit revenue growth, which is again higher than the industry. And for Trent as well, it's been on a tear when it comes to growth path. But it is the Nifty Bank that we'll be watching out for tomorrow. The Nifty Bank weekly options expiry, and that'll be an important one largely because it comes one day ahead of the RBI policy on Feb 8, which in turn will also be the Nifty weekly options expiry. And finally, tomorrow is an interesting special event that is taking place where Satya Nadella is in the country. He is in Mumbai. We'll speak to industry leaders about the potential of artificial intelligence. So maybe some pickings from his commentary for the IT space and the future going ahead as well.
All right, Mangalam, I look forward to that. Thank you very much for joining us with that list of things to watch out for. It's a wrap on this edition of Markets Forward. From Rima, me, everyone on the team, it's goodbye. Thank you very much for staying with us. More news and updates on the other side of this break.